share market. The miners are now at quite an interesting level. BHP, Rio Tinto, Fortescue, they're at multi-year supports. If we have a look at BHP's share price, this is the last 2 years. And if we have a look at BHP's, you can see that $30 level is a very strong area, and if we do see a bounce off that, that would be quite a good sign for BHP. But of course, if we see a break off that, that would be a very bearish signal. Same thing for Rio Tinto. If we have a look at the 2-year chart, we're seeing a strong support at $48, and Fortescue as well, we're seeing the same type of thing, strong support at $2.80. I guess it is important to look at what's happening in terms of the commodity space, and it's been an absolute roller coaster ride this week. Part of that is because we have seen copper being used as funding security over in China. So given the problems that we are seeing in China at the moment, we've seen a roller coaster ride for copper, and I suspect that gold may have been used for security as well, because we have seen quite a bit of gold liquidation happening this week. The good thing about the Australian share market today was, although we did see a lot of pain in the mining space, we saw the defensives kicking in. The consumer staples, the healthcare, utilities, the telecom sectors, these are all areas that did well today, and we also saw the banks with a positive performance, and that really helped along the Aussie market. So still pain in that mining space, but otherwise we saw the defensives kicking in.
We were talking yesterday, Gerard, about 1.9% at the moment. Julia, though, do you see that the continuation of the volatility around the region impacting our markets?
With the liquidity crunch that we are seeing in China at the moment is that the central bank in China is sending a signal that they're quite happy with where liquidity is at, and that the bank should be a bit more prudent when managing their balance sheet and lending out money. And that really sends out a signal in terms of growth in China, that perhaps some of the forecasts in the market at the moment may be too optimistic. And indeed this week we've seen some downgrades coming through for Chinese growth rates in the next year. And so I guess that's a concern, and if we do see the demand side of the equation deteriorating in China, of course that has a big impact in terms of commodities. China is a consumer of about 40% of the base metals market, so it's a big mover in that commodity space, and that of course in turn has an impact on our miners like BHP, Billiton, Rio Tinto. So that's really the flow-on effect that we're seeing, and that's amidst the backdrop where we are seeing an unwinding of the carry trade because of the FOMC meeting and Ben Bernanke's comments last week. So we are still seeing that strong US dollar story dominating play, and of course upheaval in a lot of markets. It's not just the equity markets, the bond markets have been going absolutely crazy over the past few weeks as well. So a lot of movements in equity markets as well as other asset classes, and I think there's really two things to be watching. One is the unwinding of the carry trade, which is still continuing, and that's a strong US dollar story. And the other is the implications that we are seeing of this liquidity crunch in terms of Chinese growth.
In the form of Billabong, rising from the ashes, Phoenix style in the end, to close up 46%.
Certainly rising from the ashes, because this is a stock that's down a massive 82% over the last 52 weeks. So it is coming off an extremely low base, but really what drove its shares today were talks with Altamont and Sycamore. And these talks are around refinancing of debt as well as asset sales. And Billabong saying that if these talks are successful, that they could see all of their syndicated debt facility being paid off. Of course, one of the key concerns in this stock was the possibility of a highly discounted capital raising, and that's because about $400 million is due in July 2014. So that's the near-term concern for Billabong. So if they are able to manage that risk, I guess the market then has to evaluate sort of the terms of any sort of deal that they come to, as well as any asset sales that they look at. Of course, this is a stock that's seen 3 downgrades over the past 6 months, so we know it's a business that is under pressure, but if it does remove some of those debt worries, I guess that would be good news for shareholders, and that was certainly reflected in the share price action today, up over 46% in one session.